Hello, 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 hello. What's going on, everybody? Welcome to Al Stock Trades. How's everybody doing today? All right. Well, I'm very glad that you guys are here. I'm sorry I'm late. I feel like I'm always late. Um, I was there. I was doing the. So let me show you. So I was doing the presentation here for AMC, and make sure I get this right here. I was doing the presentation, and I found like an error. Where'd it go? I found an error. So I wanted to make sure. So as you can see, this is a presentation specifically for AMC. This is probably going to be the most up to date, best video that you'll probably be able to find on AMC on YouTube. And yeah, I found a little error and I wanted to fact check it. So first things first. You know, what's the title again? AMC Stock did what, right? And then I put is this clickbait, right? So if you have just clicked this video and you're like, what are they going to say? What are they going to say? What do they know? What do they know? We know a lot, but it's probably not the information that you want to hear. Okay. It's probably not the information you want to hear. I'm just going to preface this that I know it's the holidays, right? Christmas is what, like next week. So again, I only have time. I don't have a lot of time. Like, this Christmas is the only time I have time to do a lot of these videos. So we're gonna be doing back-to-back videos and stuff. So, I'm really sorry. Okay, but I was on YouTube the other day, and I saw a bunch of videos and about AMC. All I just did is AMC stock, and I did it today, and I was like, this is insane. Like, next week is Christmas, and you have all these people making these videos like GameStop stock. What did Roaring Kitty see? But then he puts AMC here with GameStop and just like, it looks like one of those candies that you eat, the sour pack gummies that, that's your head, and your head explodes with like all these juices. And then he puts so this is the same guy, 34,000 subscribers. And he gets all these people with views and stuff, and you see like AMC $77, and you have 10 cents here, and then you got $679 halted, and then SPY, and like all these big numbers that they're tossing around. And there's another person here. This is not the end. AMC to the moon 7 hours ago. So, if you clicked on this video and you're like, AMC did what? And I said in parentheses, is this clickbait? And the answer is yes, it is. This you just entered a clickbait video. Okay. Now, what am I going to explain to you kind of in this video? Well, we have a pretty good solid presentation. We're going to talk to you all the numbers that my stock terminal provides. And there it is. So, and oh yes, thank you so much. Potential. Yes. I am a doctor now. I am officially a medical doctor, which is insane, right? So yeah, so now you work so hard for these two letters behind your name, MD. That's pretty cool, huh? So yeah. As Snoop Dogg says, somebody's in the house, right? I'll let you guys think of the rest. But yeah, yeah, no, I'm really excited. And there it is. So we have someone who's upset, Dr. Wolf. So we have another doctor here. Did you just graduate from med school as well? We have another doctor in the house telling us it's clickbait doesn't make it better that you're making it clickbait. Well, I mean, I was being honest, right? So now let's go ahead and let's do some analysis here, right? I know you're hurt. I'm sorry. I'm sorry. I know there's probably, more things to worry about in the world, but my apologies. All right, so let's go ahead and take a look at it. So I went ahead and did, Al Stock Trades went ahead and did this presentation. This is for just financial education, not financial advice, educational content only, right? So this was created today. So what this deck is and what it isn't, right? And by the way, Shant, yes, I do believe that in terms of access, lead, ACO, there's a lot to look forward to. Yeah, I agree. We'll talk a little bit about that at the end here. So what this deck is and isn't, right? So AMC, and I'm gonna make another Clover video. I'm gonna make after this. I'm probably gonna go to the golf course. But yeah, so what this deck isn't. So AMC is a real operating business. I mean, it does function, right? It does exist. But the stock has also been at the center point of like this meme stock hype. The deck focuses on, the mechanics, shareholder dilution, and the goal is to help everyday investors, spot the I gotchas. And the goal is not price prediction or short squeeze timeline or signal. So if you want short squeeze timelines and all these other things, that this is not what this is. And just to be very clear, if we go to YouTube real quick and actually go here to AMC, go to our videos here and type in AMC. I made a video and you could see buyer beware 3 years ago. I said why AMC stock is trash. Insiders are selling. And honestly, I don't even know which video is older. I said share dilution incoming. That was 3 years ago. And obviously you guys know what happened. This is an old video. This was back in Minnesota. So this is March 14, 2022. Wow, I had blacker hair, man. Damn. I'm old. Jesus Christ. Right? All right. So March 13, 2022. Yeah, so 2022 March, right? So if we go to AMC stock, and if we type in March 2022, AMC, and it wasn't $69 back in the day. It's just because it was stock stock splits and stuff. So reverse splits. But it was equivalent to $69. And if you look at the comments, let's investigate. Now the stock is down 97.49%. Right. So the question now is, what can we do? Now, again, I'm sure a lot of people on here that are going to be clicking on this video, they're probably going to hate the video. I got 20. This was back in 2022. I got 22 dislikes. And relatively small channel at the time, right? It still is. And then I got a lot of dislikes here. And the comments probably were I disagree with your overall point on AMC. This guy, smiley face or laughing face. Oh yeah, finally someone who tells the truth. That's a good one. There it is. FUD, man, FUD. Yeah, that's you, right? So I mean, I'm sure how much is this guy down right now, right? You see, so yeah, again, this bigger YouTuber he's probably talking about I started 7 months ago, but obviously when I tell you the stock is trash, buyer beware. It's down 97%. Now again, I wish I shorted the stock. Problem is I was here it is. Look at this guy. What did I just watch? Such trashy content because you missed the whole point. Yeah. He disregards fundamentals. Yeah. So, I kind of wish I shorted it. But the problem is, I actually thought about it. I actually was about to do it, but the reason why I didn't, and I've shorted stocks before. It's very dangerous, right? And I don't recommend anybody do it. We don't short, right? I don't recommend it because it's dangerous. Because what happens if the short squeeze continued, right? Then I would be out of. I would have lost a lot of money, and then as I was telling Dish, you would have some AMC guy message me with a Halo gif of him, teabagging me, right? Yeah, so I don't want to do that, right? So, um, but the thing is that there is a lesson to be learned here, and really, and I hope that this video, let me know if it's clear, if it's choppy, let me know. My computer's a little slow. I need to restart it, but I can't restart it because I have some files open up that I need to basically finish off. This is a live, so bear with me here. But we can learn from this, and we can learn from companies that are losing. AMC right now is a loser. It's a loser, plain and simple. And we'll look at it. Maybe it might be a winner. We'll do an analysis on it right now, and we'll see. We might even find something. Who knows? Again, I don't know, right? I have over 2. You see the stock terminal behind me in the background. I have over 2.5 billion outputs of institutionally graded data. So we're going to look at it, right? But it'll be good because I feel like it's good to look at winners, but it's also just as good as looking at losers, right? And you can learn a lot. And I don't think this video is going to be very popular. That's why I put it just on YouTube, because to be quite frankly honest, I have a lot of doctor friends on Twitter, and I don't want to be associated with this with this stock, right? So that's why I just put it on YouTube. But it's good educate. I really think it's good educational content. Now, unfortunately, a lot of people have lost a lot of money, and we're going to be looking at that. So we're going to be doing the presentation, right? And we'll be doing the presentation. Shan's laughing. I know, man. I don't want to be associated with this. like, what is this guy talking about? AMC? What the hell's going on? Right? So, right? Okay. So we're gonna be talking about this, but I just want to just make this headline. So on December 10, 2025, AMC shareholders, approved an amendment to increase authorized Class A common stock from 550 million to 1.1 billion. So what does that mean? Just like what I predicted, many years ago, 3 years ago, I said, why is AMC insider selling this garbage stock with a emoji? Share dilution coming. And then guess what? You have another share dilution coming. And if we were to go ahead and go on to Twitter and look at this thing I just posted here, look at the dilution. I made this video here and I said share dilution incoming. Boom, boom, boom. And now we're going to be off the charts with this. Boom, right here, right? So this vote doesn't guarantee dilution tomorrow, but it removes a hard ceiling that previously limited dilution. So we'll talk about that. But before we get into the nitty gritty, the debt, the numbers, everything, there's a lot of people here, that, I'm sure they're going to look at this video and they're just like, man, screw this guy. Right. But again, there's people that have growth mindset and fixed mindset, and you just, it is what it is. So, so we'll talk about a couple things. So, AMC bought HYMC stock, which I actually liked. I agreed with this purchase. I actually agreed with this. But they sold it before it actually made them a lot of money. so kind of speaks to management there. They bought in when it was like pretty low, like, 2, 3, it was pretty low, $2. And then now the stock is, a six bagger. I was surprised that they sold it, but obviously it's not like it would have made them a lot of money. I mean, they 10, $20 million they would have made. What is that? They have what the hell is 10, 20 million, right? My total net worth is in the 15, 20 million. And I'm telling you right now, that is not going to save AMC. Once you see the debt, you'll realize that AMC needs billion. Probably. We'll figure it out when we look at the balance sheets and stuff and all that. But yeah, so that was upsetting. And then people are kind of commenting on it. Someone said here, look at AMC's 5-year chart. Almost threw up my breakfast. Oh man, the price is now lower than its pre-squeeze lowest low. And it's going to go even low. Yeah, so kind of sad, right? And then let's see. So before we get to the analysis, let's just kind of read the battleground right now. Like when the dust settles, the dust has settled right now. There are still some people hyping up a short squeeze. Let's just see what people are thinking now, right? Let's drink some coffee and let's, look at this, right? So why would you not get in at this price? Oh, so this guy is bullish. He's the big bullish here. So let's see, no one's liking it. So you can see the sentiment for AMC has changed now. Right. Yeah. We've seen all you doubters commenting on all the posts the past 3 years. But why would you not get in now for the price of a small black coffee? Very interesting. Okay. AMC is not going bankrupt, so it can't go down more than $1.85. Haha. What is it now? $1.76. Jesus. Okay. All right. Okay. All right. All right, man. This is very comedic. Okay, let's see. The bots trying to lure in new investors are deviant. What bots? Who? Right? Straight up scammers. Been going on for 5 years. They will do a reverse stock split. Yeah, okay. There's no more FOMO. Yeah, seems like it. All right, now. So this guy commented 5 hours ago. He said he's bullish as well. I feel like the only time you can post on here is you have to be bullish. So I've stepped back from Reddit for a few months. Haven't checked my account either. I was getting really upset, so I took a break and I haven't sold a single share. And I've been here for what seems to be forever. Discovered today that it's only down 98.1%. Never lose hope? Question mark? No, I don't understand. It's only down 98. But what do you want? Hand sanitizer? 99.9% down? Diamond hands. Do people still say that? Okay. P.S. Glad to see Ortex guy still here. There's a guy on here who just like every day. That's his job. He wakes up in the morning, brushes his teeth, hopefully, goes on the computer, takes a screenshot of Vortex and puts it on Reddit. Okay, so yeah. Yeah. All right, let's keep going. My fellow apes. I know it sucks seeing the price action right now, but everything is taking a nosedive in the market right now. Don't worry, we'll overcome this minor. Yeah, that's not true. Right? So money circulates, right? And you really gotta look at kind of what you're you can look at the numbers, right? But you gotta look at what the future is going to look like. Like Netflix went ahead and wants to buy Warner Brothers, right? So they made a commitment not to remove it from theaters, but do they really care about that commitment, honestly, if it's going to cost them money? I'm sure they're going to, why are they going to want it? So they can use it in their damn Netflix streams. So the future of, theaters, the business is, it's not like, again, like, you have this whole AI movement happening, and it's just like this huge AI movement happening with like stuff, just this is like the fourth industrial revolution. And you have all these people hyper focused on the popcorn business. Like I feel like that's the last time. Maybe AMC can do robotics and have like a, just a robotic AMC thing, but that's going to cost more. They need to focus on decreasing costs. This guy says what I was saying. Excuse me. The gold miner stock sale makes little no sense, or perhaps leaving millions on the table. Yeah, but it's still millions. They're billions in debt. So, well, 1.5 billion, I think. I gotta check at that thing. So then someone says here, the next roaring kitty, please stand up. About now would be good. Anyone with such qualifications to lead to lead us into the next short squeeze in any stock, please. Yeah, you could see this is this is what this person's waiting for. It's really sad. Rather than let me learn what fundamental analysis is. Let me learn about Peter Lynch or Warren Buffett. Um, they say if you use a hammer for everything, everything looks like a nail. They say if you do the same thing over again, expecting a different result, that's a definition of insanity. Let me drink some water. All right. The FUD on Webull is unbelievable. Okay. All right. Let's see. I'm down a SHIT ton. So is there any point of holding this point? This is a I don't know what tinfoil hat. Okay. All right. Not a lot of likes. I'll like it for you. Oh, it's okay. I'll like it for you. I went from like 50K value to 3K. So he's down a lot. It's such a low number now that I don't mind just writing it into the ground, but only if there's any chance of it increasing. Is that even a possibility at this point? This guy says, I lost 230K. Jesus Christ. That's a lot of money, guys. Right? I'm going to explain to you why. I mean, yes, I have a lot of money, but like, you have to understand, there was a time where I didn't have money, and making my first 100K took about 8 to 10 years, right? So it takes a long time to make your first 100K. So so to kind of blow up 230K, that's tough. This guy is going to have to work unless he has a high paying job, right? So when my holdings were worth, wait, hold on. Last 200K, when my holdings were worth only 4K, I sold it. I realized that AMC is not going to go up. So he sold that for, so he went from 230K to 4K. So he lost about 226K. It simply has too much debt, not enough revenue, even Abe spending over backwards to boost the ticket concession sales. The company remained unprofitable. Exactly. Sometimes it makes sense to hold when the stock is worthless, but in AMC's case, the reverse split dilution will only destroy any availability for you to recover your losses. It was expensive. There it is. I respect this person. It was an expensive lesson for me to learn. I kept thinking this time would be different because of the AMC GME movement, and I truly believed our diamond hands would be the deciding factor. Yeah, no, that was wrong in view, and you realize that it's a learning lesson, and maybe hopefully you can learn about fundamental analysis, right? And how to actually pick stocks that are because here's so the reason why am I showing you all this, right? I mean, there's a reason to this, right? So there are people that are growth mindset and fixed mindset, and there's just some people that just they're not going to listen to this, right? And that's okay. Those are the people that are going to always buy into hype, and they're just going to buy high, sell low. I mean, that's just what they do, right? And what's important that I want to point out here is, like, when you invest in a stock, what do you think? What do you think you're invested in? So I got an email here. What do you think you're like? What do you think you're invested in? When you buy a stock, you're buying a piece of a business, right? So whatever that business makes after all of its expenses and stuff, you make based off of how many shares you own of that company, right? And so there's that. But what happens if the business loses money? Well, then your let's say ownership of that company, you actually have, you lose value, right? And that hits, the valuation of the company. But let's say that, for example, the company needs to raise money, right? Because they have more debt than liabilities and assets. Well, they have to then have two places to raise debt. They can raise cash. They can go get debt, which unfortunately for AMC's case, they tried, and it's a bit hard on them because interest rates are high. So they said, okay, well, we have all these apes. Let's see if we can kind of like delete all of our past mistakes and just kind of have these apes front run the cost. Now this is what I'm waiting for. And I hate to say this, right? I hate to say this, but so let me tell you. So I hate to say this, but this is the truth, right? So I am waiting for them to just delete all the debt and dilute more until I see more assets over liabilities. And then I'm waiting for them to just sadly destroy all the shareholder value. And then I do believe the company is going to go, the valuation I think is going to go under $1 billion. I mean, what is it now? It is. It's $902 million now. So the company's worth less than $1 billion. I was thinking if this company goes down to like, 200, 300, $400 million, I would and for you to understand what that means the stock price, there's going to be a reverse stock split, I think, right? In terms of like, there has to, I think there's going to be a reverse stock split. We'll see. Who knows? But I'm not gambling. I mean, let's say if it goes up 10x now, I don't give a crap. I'm not putting my money into this right now, right? But I am watching it because I see a company offloading their problems onto apes, and then these apes are pretty much just being used. Also why I'm making the video too, so you don't like people maybe don't stop getting used, maybe, right? Might help you make money. Don't get used by Wall Street. Adam Aaron did a like 10-5B, whatever it's called. I forget all the numbers, but he actually was selling at the top. He was selling in 2021, 2022. He was selling at the top, guys. And he was saying, I need to retire, and all these things. And yeah, dude, he sold at the top. And in my opinion, I believe he fleeced retail investors, in my opinion, right? But but right now I'm gonna let the fleecing continue, and then all these, for someone to be down 230K and they sold for $4,000, that shows me that the sentiment for AMC is starting to crack. And there are some folks here that are left that believe in these diamond hands, and it's going to come to a point where that's going to become a minority. And if you were to isolate those people and probably talk to them, they probably have some form of mental illness, right? I think, right, there has to be something going on in the brain, right? There's like there's going to be some really corked out people, I'm sure. It's the big, this movement was huge, and so I think that's you're gonna get that. But now I'm curious, because what strikes me as weird is the short volume for AMC is high. It certainly is. It is high. Let me see here. Volumes. Yeah, it is high. It's about 37.24% on dark pool volume. Short interest is 44 million shares. So you do have a significant amount of short volume. But what I find interesting is is institutional ownership. And I don't know if that's them trying to cover or not, but what is interesting is, and I need to look at this to make sure I'm not messing this up here, or I'm not like this is just kind of a one thing, but I always like to verify my data. But this is kind of the ownership here. So you can see everyone kind of sold AMC right here, institutions, right? They had a lot here. They probably covered, stock went up, and they started laying it off, and then the stock dropped. And then for some reason, institutional ownership has been rising. So you can see here, um, stock price rose, it's short squeezed, right? Remember? And then institutional ownership went up, right? This is institutional ownership. And then as the stock was down, institutions offloaded it. And then now, as the stock price drops, we got this huge institutional ownership increasing. So that I do find that odd. It's only one data point, but it's a bit weird. Like, why are they buying it, right? Am I missing something here? Like, so that's something that I was a bit curious on. So if you look at our data here and take a look at the 25-year mark here, and then look at the analyze. Actually, let's score it. It's a 5-4. So it's just weird. Institutions are buying AMC. It's weird. So the stock price rose. They dumped it. They went from like a high of owning 778 million to like 41 million. So they dumped over 100 million shares, right? And then now all of a sudden, as the stock price has gone down, they've been increasing their ownership, and now they own 266 million of this. So it's a bit interesting, honestly. It's a bit interesting. I saw this is a weird data point for me. Why is institutional number of 13F shares increasing? Who's buying it? I mean, we can look at that, but let's look at the biggest shareholders of AMC. Your typical Vanguard, Pentwater, Renaissance, Blackwater. I don't see Renaissance. Ooh, Renaissance is still here. Renaissance. This is getting interesting. So Renaissance increased their share count to 16.87 million. Their average price is $6.84. They own 6.6 million shares. So they're so $6.84. So it's a bit interesting to see that. So that's what I'm trying to kind of wrap my head around. I mean, a lot of this also is Russell 2000, but I mean, it is kind of weird though to see Renaissance in here. They obviously I mean, it is oversold. I mean, there is going to be relatively some form of a bounce, but the problem is they need to fix their issues. So let's go into the specifics here. So if we go to AMC and go all the way down here, you could see that their liabilities, I mean, assets and liabilities wise has gone down, but you still have 9.7 billion in liabilities and about 8 billion of assets. So it's about 1.7 billion of more liabilities they have over assets. So what does that mean? Well, it's simple. It means that they have more debt that they have to pay off than assets. So if you look at total, let's look at the total current assets. Total current assets. Let's look at 619, and then let's look total current. Yeah, you see, they need money. So it's important to see when these things mature. I don't know if they're going to mature in 2026, but but man, this is bad. So again, it's just I have a really hard time wanting to touch this. I mean, you do kind of see smart money starting to come back online. So that's interesting. It's very interesting. Yeah, so I don't know. We'll have to figure it out. Now, what I want to know is what are the analysts thinking? So let's just kind of blow this up a little bit and let's look at analyst estimates. So analysts think that by 2027 they're going to make 5.6 billion, but really what matters is net income. Analysts really do not see them profitable. Now they could be lying, but you know, they don't see them profitable for a very long time. I mean, they see them cut their losses by like 2026 to negative 18 million. This year's negative 249 million. So they do see them negative 18 million in 2027 and then negative 47. Man, it's still tough. Yeah. So yeah, what I would do here for me is, for in terms of AMC, you could see that if you look at the quarterly data, and this is our Al Stock Trades terminal. I created this. If you look at net income, Q3 is negative 298 million. Yeah, the balance sheet looks like the U.S. government. Yeah, the only problem is AMC can't print money. Actually, they can. They can print shares, but good old American taxpayers, or I guess AMC shareholders, are fronting the bills. So actually, good analogy there. A really good analogy. I love that. If I could give you XP on here, I would. But no, Q3 2025, you got negative 298 million, and then it looks like the net income is getting worse. So hopefully they might get better next year. But I mean, Q2 is pretty good. They almost were profitable. Q2 2023, they were profitable. That was great. And I'm sure the stock went up in 2023 Q2 halfway. Let's see what profitability can do, right? So in 2022 halfway, that's probably what it was. You see, it was down here and then it shot up. It shot up 96%. You see what profitability can do for folks that are watching? Gap 2026, right? So you see that? So that was probably when it became profitable, right? But it's tough. I mean, really. So it's sad. This makes me sad. Anywho, so they're gonna be authorizing more dilution. Here's the share count that exploded. So in 2019, they had 5.8 million shares. Then in 2024, 414 million shares. And then now they have 512 million shares. So it's pretty much explosion of shares. And I'll explain what that means. But they completed a 1-4-10 reverse split in 2023. We show the pre 2023 numbers adjusted, so you can look at the size comparison. Here's the authorized versus outstanding. So the outstanding is 513 million shares. The authorized pre-vote was 550. Now it's 1.1 billion shares of post-vote authorized share count dilution. So that creates room for an additional 587 million additional shares beyond September 30th, 2025. Wow. So cash and cash equivalents for September 30th from the data right here I have is 365 million. Corporate borrowing is 3.9 billion. Total stockholders deficit is 1.777 billion. Total liabilities 9.798 billion. So what does this mean? So a large debt stack plus negative equity often pushes companies to raise fresh capital. Issuing stock is one common option, but it can be painful for existing shareholders. And that's what's happening right now. A lot of these shareholders, I mean, that's how you go from $230,000 to like $4,000. I mean, that really is terrible. Your cash equivalents is about 0.37 billion. That's about $370 million. And then your corporate borrowing is 3.99 billion. So you can see they don't have the cash to pay this. So what they would do is they probably have to issue more shares, get more debt, or close down AMC assets and sell those assets. I'm sure they probably AMC closes movie theaters. I'm sure they probably have closed some movie theaters. Uh, let's look at the news here. Market Arcade Theater to close at year end. Yeah, Arcade A, AMC shutters middle village location. So you could see they're closing down their movie theaters, the ones that are probably unprofitable, most likely. So you could see, AMC closing, right? And you know, this is starting to be dangerous because if they're closing all this and they're still in debt, then they're starting to look like a bankruptcy, right? And no one wants to buy this crap stock anymore, right? I don't care how many, I'm sure there's people out there that, maybe the apes might build them out again, but I'm sure those original apes that lost over $200,000, I'm sure they don't want to donate $200,000, right? So that's really sad, right? And if usually when I make a video like this, someone says, I'm going to buy some more. Thank you for your signal. I'm like, what is this? Okay. What is this guy saying? And let's see if they say that again. That'll be interesting. Right. So dilution in 30 seconds. So think of a company as a pizza. If the pizza stays the same size, but the company prints more slices, each slice is smaller, right? So your ownership percent equals your shares divided by total shares, right? So if your total shares, if total shares on the bottom doubled and you don't buy more, your ownership percent gets cut in half, which is why the stock price keeps going down. So dilution can still happen even if the business improves because the business may need to raise more capital first. So, it could be a turnaround. I just don't see it now. It just hasn't shown it. I have seen the net income get better, but like this last quarter, it's over $200 million. In fact, I'm curious. AMC Investor Relations, what did they think about the last quarter financial results? What did they think? Because like this last quarter here is very bad. It's $298 million in the hole. So what did they think? What is this, Q3? I'm honestly curious. What do they think? All right, let's see what they say. All right, so total revenues, net loss. Yeah, look at this. Net loss 298 negative compared to net loss of 20 million. So they're getting worse. And then they have to explain themselves because you just can't say that and just move on. You have to put something. So this is what they say. Let's see how they redeem themselves. The increased net loss stems primarily from non-cash charges associated with transformative July 2025 refinancing that was highly beneficial for AMC and which allowed AMC to fully redeem all of its 2026 debt maturities. So again, because they have a debt problem, they recognized it in, let's say, that quarter. So, okay, so they can say that, all right, so they're structuring, Adam Aaron is good at restructuring bad companies, but it's just the company's been on a terrible spin for a very long time. Historically, has AMC ever pulled a profit? The only time, let's look at the AMC on the net income perspective. AMC was profitable in 2015, 2016, and then 2017, negative in the hole, almost $500 million. Then 110 million profitable. And then since then, it's been unprofitable. Let's look at the extended history. If there's any, okay, yeah. Let's look at net income. So AMC, and that's most people don't, this is AMC back in 2007. Most people don't understand, we could look at this data from the past and let's see how this company even performed. So AMC was negative, unprofitable in 2007. 2008 makes sense. 2009, 79 million. Then 2010, unprofitable. 2011, unprofitable. 2012, they made 21 million. 2013, they made 364 million. 2014, only 64 million. 2015, 103 million. 2016, 115. Okay. Then since 2017, it's been downhill. So I'm sure the stock probably rose up in the 2015s and 16s based off of the fundamentals here. Let's see. Yeah, you see here 2015s and 16s and went up, and after 2017, it just went downhill. Look at that. It just went to the trash, right? So, and look at free cash flow. Again, guys, it's listen. Okay. I just gave you, how many years is that? 2025 minus 2007. I just gave you 18 years of history. And there's only been a few years where AMC was good. The rest of it was trash. Um, I mean, again, this is this is a good example to look at. Look at the history of the company, and just look at it, and just try to see if you can maybe put some information in your head, you know, to make it make sense. But and even look at this. Look at book value. Look at the book value. Here's book value. It was 35, 50, 30, 18, 69, 173, $138. And then now the book value is negative $5, below a dollar, below a zero, which you really can't do. You can't go below zero. But you can see the highest was on 179. You could see that was right around near the short squeeze, the book value here. But that was like, 150 here was where the high. Listen, guys, plain and simple, after 2016, after 2016, the company turned to shit. 2015 was a good year. After that, you see, this is how beautiful. 2015 was a good year. And after that, the smart investors left. The stock dropped in half. And then the idiots bought, they thinking that they're going to be good. But the smart investors saw the writing on the wall here. They left. Idiots bought. They got destroyed. Some people had their chance. They decide to still hold because they thought it was going to go to the moon. And then now they're, this is the reality. And this is a gambler's mentality. If you held through this thinking, you're gonna, you're gonna, you already know, I don't have to tell you, so, yeah. But yeah, you could see that's what they were saying in terms of the net loss. So they're trying to explain it. So let's see. Let's see what else they say. So calendar year 2025 is turning out exactly as we have long predicted. What the fuck? As long we predict. We predicted this. Due primarily to the timing of major studio film release dates, a weak first quarter was followed by a blazing hot second quarter. So let's see what he thinks as a blazing hot second quarter. So let's look at the quarterly results and let's look at the second quarter of this year. That blazing hot gave them negative $4.7 million. Still unprofitable. How about free cash flow? Okay, $88.9 million. So he's referencing that. That was a nice blazing hot. But you're still unprofitable, homeboy. Okay. All right. Which was followed by softening third quarter. We continue to expect that the year will culminate into what we hope will be quite a strong year-end fourth quarter. So we'll see. We'll see. Maybe that's why. Maybe that, you know what? Maybe that's why a lot of institutions are buying. Like, you remember I showed you this little institution here? Maybe that's why they're buying it before the fourth quarter gets released, anticipating a strong fourth quarter result. I'm actually curious. Is Cinemark still a stock? I like to go to Cinemark. Yeah, Cinemark is $2.62 billion. Cinemark, let's look at Cinemark in general. So Cinemark, it's not bad. I mean, it's looking pretty good, Cinemark, right? So let's see Cinemark. I'm honestly curious. Has anyone looked at Cinemark? So Cinemark's making $3 billion. Cinemark is profit. What? Cinemark is profitable. What's their free cash flow? Dude, Cinemark is profitable company. It's a profitable business. Now, why is AMC not profitable? What's going on with AMC? See, this is where the magic is. You got to figure out why. So they got a weak Q1 relative to Q1, and then Q2 is good. You see, this is interesting. You see, this is interesting. See, this is the shit that gets me excited. You see, so they became a triple dragon again in Q2, but you see how it's still not a relative like a 4 consecutive quarter triple dragon. But you could see here, you see, based off of this, guys, I would say Cinemark is a way better company. I'm curious to see what Cinemark's balance sheet is. You see, now I didn't think this video was going to take us to Cinemark. Look. You see how there's more assets than liabilities, 5 billion versus 4.4 billion. I mean, still a lot of debt, but it's better than AMC's garbage, which is like, AMC's 8 billion here. This is 10. So this is the $1 million question. Can AMC become like Cinemark, right? I mean, I'll be honest with you. If I go to a movie theater, I like to go to Cinemark. They look nicer. Just as me as a consumer, I like to go to Cinemark. So I like to go to Harkins Theater as well. I don't know if you guys know Harkins Theater. Harkins Theater. If I go to the theater, I haven't gone to the theater in a long time. I usually just watch a movie at home. But this is like Harkins Theater. I like Harkins. I've been going there since I was a kid. But yeah, Cinemark looked pretty good. So I'm just curious. So if we type in AMC right now, based off of kind of what we're doing here, it's not. I would say that it's just you just can't do one because I don't no way. It's interesting to see because the revenue is stabilized. Free cash flow. Ooh, that's sexy. 10% goes to free cash flow. It's pretty good. 10%. Usually it's 5%. Historically here, it's been you see how I remember I told you guys I do 5% right here. It's around 5%. Then 2020 was terrible, which we know because of COVID. Then they bounced right back and it became free cash flow positive. So obviously Cinemark is way better than AMC. Cinemark destroys AMC. See, C&K versus AMC. Let's see if someone else has talked about it. Cinemark compares to movie theater. You see, Cinemark generally seen as a more financially stable, profitable, and conservative investment. You see, they still have debt, but at least they have their assets are better than their debt. So this the question now. The question really, and maybe an AMC person can help me understand this. And you can't tell me about hedge funds and bullshit. You can't give me this excuse. Can you please teach me and tell me why does AMC have more debt than assets while Cinemark, I mean, it's very clear corporate management, right? Corporate management for AMC is shit. So the question now is Cinemark undervalued right now? That's really the question here. Oh, so let's see. Revenue is going down. Let's see what they think, the analysts for Cinemark. Analyst estimates, revenue. Yeah. Let's look at net income. Wow. You see how there's more analyst coverage? There's more analyst coverage here. They're thinking, that's really interesting, guys. Look at the net income. They're thinking net income is going to go all the way to like $450 million for Cinemark. Now, we have to look at history and see if we can extract the history here. And you could look at net income. Historically, you could see Cinemark, 2020, 2021, 2022, those were terrible years for Cinemark. And then 2023 and 2024, they just turned the corner. And now they're at $300 million of net income, which obviously makes their free cash flow $315 million. So obviously, this is looking like a pretty good investment. I didn't, by the way, I didn't think about this. So 2023, they became a triple dragon from what I'm seeing here. Okay. So the goal now is look at gross margins. So the question is Adam Aaron trying to get back to the good old days of AMC? The problem is there really isn't good old days of AMC. The only good old days was just 2015. That's it. That's the only good year they had. Maybe 2010, maybe, or whatever it was. With Cinemark, they've had good old days for a very long time. You could see them not doing well see, whoever tells you movie theaters do well during recessions is all bullshit. Look at 2008. They were unprofitable by negative $48 million. This was the great financial crisis. But you could see they rebounded right back earlier. So you could see this company historically has been managed really well. So the question now is, what are institutions thinking about Cinemark? So what are they thinking? Let's look at dumb smart money. Oh my god, this is just sexy. This is just sexy, 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 sexy. Look, smart money turned bullish, stock exploded, right? Then it turned bearish, stock went down. Then they turned bullish. What happened to the stock? The stock was $14, and as soon as it turned bullish, one, two, three, four, five, six quarters in, it went literally from $14 to $30. That's pretty much doubling your money. Again, listen, this is called market sentiment intelligence. This is market sentiment intelligence. This is like the FBI, right? Right? Or CIA, right? So that you can see like this. There's a lot of data that goes into this, and there's only 3 lines. We take all that data and we compress it down to 3 lines. Smart money versus dumb money. It's very helpful, and it uses fundamentals. There's no technical analysis. Still look at the RSI and the simple moving average and all the crap people talk about. This is like high end research. Okay, so all right, now I'm curious. What is Cinemark? What do they think about Cinemark? Here with the institutions. Let's score it. So interesting. There's a lot of bears for institutions. So what do they see? So let's analyze this and let's run the data here. So what's going on? So the stock price went down, investor holdings went down. So they did sell a lot of stock in 2022. You can see the blue line is in 2022. But that makes sense. What happened in 2022? What happened? Well, here's 2022. Let me show you. In 2022, like so in 2020, 2021, and 2022, they were unprofitable. Then in 2023 and 2024, they became profitable, 188 to 300 million. So you could see they started to increase here, and they started. So actually, no, that's not a bear. That's actually pretty good. Okay. So now let's go to number of 13F shares. So they sold a little bit and now they're up, but then they recently started selling off some of their shares. The question now is, why are they selling off their shares? Why? Why are they selling it off? So that's something you have to look at. And then if you look at the put the call ratio here, they're not shorting this. They're not shorting this. You had a spike here, which then the stock dropped, and you had another spike, stock dropped, and maybe so we'll monitor this to see if there's a spike. So maybe the stock might drop. We'll see. Who knows? But I don't see a spike now. There's a lot of people closing their positions. A lot of institutions in blue have closed their positions. So they're increasing their closure of positions here. Reducing positions has gone up a little bit. So they are pulling out a little bit, right? So they are pulling out. The question is why? But we already looked at kind of what they think. They do think that it's going to be profitable. So, and even if you look at Fintel, which is another resource, again, just try to, you know, trust but verify. You could see this. There has been a little decrease here, right? But here's the problem with Cinemark that we haven't really explored. What is the percent ownership? How much does Wall Street own? And this is what's going to get interesting. So here's 100% ownership. Right now they own 118%, and then they own 108%. So most likely they still own over 100%. So like, why do they own that much? Well, I think it's because it's the probably calls and whatnot, and maybe synthetic shares on the upside, right? So from what it looks like, this looks like a pretty damn good company. And let's look at the low version of net income. So let's assume that everything falls into place. So let's look at the intrinsic value, but let's do the free cash flow. Let's say it remains consistent because it's always been around 250, let's say, to 300. Let's say it's 275. And let's say the growth rate is 5%. If we do that, then that's $13 recession. Bear is 22, base is 28, best is 37. So Cinemark could go to 37. And it's 22 now. Now obviously if this goes up more, let's say if it doesn't grow. Yeah, so it's trading right at its base case to best case. So it can go up to 26. So 26 to 37, right? So what is it trading at now? So 26 to 37. So here it is. See how beautiful fundamental analysis is? So let's see the highest. What's the highest it's ever been? Yeah, 32, 32. I saw around 32. So yeah. So again, not and what is this 42 here, and then all of a sudden we dropped here. So the point is it going to go to its heydays, which is here? Obviously, this is a financially sounding company. This company is well constructed. This is not going to give you like a 10x, but it's a nice stable company. The question is, do they offer dividends? That's another thing I want to know. This is a dividend. So they used to offer dividends in 2019. Then in 2020 they slashed their dividends, and then in 2021 they stopped paying their dividends. So this is actually interesting. You see, this is where things get a little spicy. Okay, so right now this is going to be good. This is going to be good. Okay, so check this out. Check this out. See, this is going to be good. All right. So the thing is, I'm sure a lot of AMC people, I should make a Cinemark video, honestly. This is going to be brilliant. I've seen this story play out before. I've been investing over 10 years. So I've seen this story play out. So let me give you a story before I explain what the hell I'm going to show you. So a long time ago, this is called energy transfer. I know the leadership team. I've been, I'm like I'm not like an activist investor, but I'm like, let's put it this way. I'm a wannabe activist investor. I'm a wannabe, right? Right. But you could be a wannabe and still be successful, right? So let's look at the dividends. So if you look at dividends, for energy transfer, there were some moments that they actually cut dividends for energy transfer. So if you look at dividends here and look at enhanced history and look at the dividends per share, you could see how in 2005 they cut dividends and they brought it back. But let's just kind of go back to here. So there was a time where Energy Transfer actually cut down their dividends for their stock. So you see how they cut the dividends down here? There was a time where they cut, and you could see they used to do $1, and all of a sudden they cut it down to 69 cents. So in 2021 and 2020, the stock went down to like $3, right? I went ahead and I actually I bought a lot, and some holdings I get like I think like 40% a year in dividends now, which is insane, right? I get an automatic 40% because I bought the stock low when they didn't have dividends. Stock is now, 15 plus dollars, and then I get a dividend on that, right? And I get 40% a year. That's pretty impressive, and it's natural gas. So, right. And the dividend has pretty much basically has risen to the highest it's ever been and I believe in its history. I believe so, right? Let me double check before I make that comment. Right. There was a time in 2011 that we're going to get closer to, but that's about it. So what happened though when they increased their dividend? So look at the dividend history. So in 2022 they rose it, and then in 2023 they rose it. So really, from 20. So let's look at energy transfer price. So you could see what happened when they dropped it. When they dropped it, the dividend, the stock price fell. And I know it says $6 or it says $4.77. That's not correct. That's the closing. If you actually look at the actual stock price in 2020, it actually dropped way below that. So if you look at energy transfer, how do I know this? Is because I was a buyer. I wasn't actually able to catch the bottom all the way, but it dropped to $1.77. I wish I got it at $1.77. But yeah, I ended up getting it slightly, on the rebound here. I just because again, I was moving a lot of cash around, and it took a couple of days for me to move the cash around. And by the time, this is daily, so this is weekly. So by the time it fell down to $1.07, the actual price here went back up to like $3. So yeah, right, this was energy transfer. Remember we got a shit ton of energy transfer, yeah. So is Michelle here, but yeah. So anywho, so there it is, right? So what happens though when the stock basically went up, right? The stock went up again because they kept increasing dividends, and again, these types of companies, they only went up by 136%. Now you might say, well, Al, that's not impressive. That I don't like. That's not like that is not impressive, Al. that doesn't really give me like increasing by 100% is silly. Let me give you an example. Okay. Pretend if you put let's just I'll give you an example. Pretend if you put $500,000 in energy transfer. Let's just I didn't do this. I didn't get at the bottom. I'm just going to give you the since we have the number here, 177. Let's assume we got it at 177. Okay. You have about 282,000 shares. Okay. So now the price of energy transfer now is $16.39. So if you do $16.39, you can see now you've made 4.6 million. Now this is where it gets interesting. Okay. So yes, you turned you turned $500,000 into 4.6. Great. Okay. But that you could make it lower if you want, but that doesn't really, that's not that. And I got in like the low upper, sorry, the upper threes. I didn't get in low in 177. So I didn't make this much, right? But I did make a lot. But let me just explain. So you have this now, but there's something powerful here, okay? Because if you look at energy transfer right now, the dividend yield is 8%, but that's bullshit. That's 8% off of $16. Okay. What do you think the dividend yield is now when you got it at $1.77? Holy shit. So I would even begin to calculate that, right? So let me give me a moment. And the payout ratio is kind of scary a little bit. You gotta look at that too. That's been increasing, but I mean historically they had a high payout ratio, which is why I'm not bothered. Let me see if I can just understand this here. So dividends per share, okay, that's $1.36, right? So dividends per share. So that means for every share you own, you get $1.36, right? So. Hey, Michelle, can I get my phone, please? Where's my phone? Can I get my phone real quick? Where's my phone? Yeah, that's fine. Where's my phone? Yeah, hold on. Let me just see something for a second. One moment here. Oh, I only have 6% battery life. Okay, I better do this quick. Hold on. Okay, hold on. Let me see. Excellent. Okay. So the dividend yield is I'm just trying to, because I got 30, it's about 33 cents per share per quarter. So 0.33 times 4. So dividend yield is 132 now, not 136. So it's about 33 cents. So let's look at dividends per share. That's why I see 33 cents. Because okay, so they change it per quarter. Okay, my apologies. I see 33 cents. But let's call $1.36. So now I want you to look at the power of this. So I get about $1.36 per share, right? So let's assume we have 282,000 shares times 1.36, right? 1.36. And we're going to be talking about dividend stocks in the future, right? So I make, based off of this investment, I make $384,000 every single year. So I make $384,000 off of this example I'm showing. Okay. So now you can start to see the magic. So what are you making on your original investment? You put in $500,000, you're making 76%, right? Obviously, I said I was making 30 to 40% because I didn't buy it at $1.77. I bought it like in the upper threes, right? That's why I'm not making 76%. But if you did buy at the bottom, you would make 76% off of your original investment every year for energy transfer. Okay. All right. Now, obviously, if you take the 384,000 and divide it by 4 million, you start making around 9%, which is right around the dividend yield of 8.11%. But you want to do it on your original investment of $500,000 because we let in this example. So Now that we went ahead and basically talked about this, and we pretty much engaged in this, and we just kind of like talked about it. So now let's just bring it up to what I wanted to mention here. So remember, I told you that I've seen this story before. So if you look at Cinemark, its dividend yield now is 0. They're not paying anything. So if you look at the quarterly, they're still not paying anything. There is no dividend yield. They're not paying a dividends. So the question is, what do you think is going to happen when the dividend yield comes back? Now, it's obviously better to have probably purchased Cinemark when it was low in the $14 region here, or in the $8 region, right? And I'm sure it was probably even lower here, right? Yeah, it's still for the $8 region. So that same story is going to happen, because that dividend yield is they're going to probably bring back that dividend, and it's going it's going to be pretty good. So that's kind of maybe the reason why institutions love the stock, right? Because think about it. Imagine now you made an investment in 2020 when they cut down the dividends for Energy Transfer, and you bought it, but you doubled, you went ahead and the stock went up 5-10x, right? The stock went up 5-10x, and you want to sell, but you think about it and you say, well, I'm making $300,000+ a year on dividends here. See, that's why Energy Transfer is one of those darling stocks, right? That it's just one of those stocks that everyone loves. So the question now is, if we go back to AMC, do they used to issue a dividends? And the dividends is going to be quite weird, because they used to issue, $7, $20. And that's because the reason why it's like this is because the share count was low based off of this. Now the share count is high. So what would be the dividends? And this is the issue we have right now. This is the issue. Can they go to the heydays and and what type of dividends can they give? And that's, I would say, the biggest bet for AMC. So if AMC somehow pays off its debts, I just don't, it's not like Cinemark. I really think they just bought a bunch of shitty movie theaters that is not, they didn't put them in good locations like Cinemark. I don't know. Right? They're just bad luck. Like there's an AMC in the upper part of Tucson, and there's been a lot of renovations in that area, and it's just a shitty area to be at. You know what I mean? What a shitty place to put a movie theater. It's just bad luck, maybe just bad management. Honestly, it's just really, truly bad management. And not just at the top, it's just bad people that ran regional areas. The question is, can it heal? And I personally would want to get the stock at $200, $300, $400 million rather than $900 million, because I'm greedy and I want it to just, has AMC's losses been better? Yeah, it has. But look at the history of it. Its history isn't so, its history isn't so sexy. When has it ever been sustainably profitable? It has not. So this is kind of what I'm thinking. So again, long video here regarding AMC, but I think there's a lot of lessons to be learned here, right? We talked about Energy Transfer, we talked about dividends, we talked about Cinemark. The unfortunate part is the writing was all over the wall, and retail investors ignored it, or AMC investors ignored it, and now they're biting the bullet. But I think if they dilute them again, which they already voted for, and they pay off all their debt, and you start seeing more assets than liabilities, and you start seeing them track to profitability, and the stock is still down because nobody wants it, I think that's when I'm going to start to maybe nibble. But as of now, I'm not touching this. Now, Cinemark is actually something interesting. When is CNK stock return of dividends? Has anyone wrote about this? let's see, pays quarterly dividends. Are they paying dividends now? 1.46. Okay, so they are paying. So they decreased their dividends. So this needs to be updated. They did their dividends quarterly, and they're paying dividends. Okay, so they are paying dividends. And the question now is, are they going to get back to their heyday of, because right now they used to do 34 cents per quarter like Energy Transfer, and now they're doing 8 cents, 9 cents. So it's the same ideology, right? Think about it. It's the same type of thing. You buy it now at a lower stock price. They up their dividends by 3x. You're going to make 3x of whatever dividend that you're getting right now. That's if they go back to their heydays, right? They're being very conservative now because they're only giving a little bit of dividends. They're slowly increased it by a penny per share. So that's actually quite interesting. So again, we'll see kind of what they do with that. Yeah. And then I'm curious to see, what do other analysts think of actually, let's do this activity here. Let's this is tip ranks. I'm curious to see kind of what other AMC holders, the high is $3. So these are just sell, really terrible. And you can see how the fundamentals drives these bad prices. Now let's look at CNK. Now hold on, before I haven't looked at it. We said anywhere between $26 to $37. So let's see what analysts say. Holy shit. Still got it, baby. All right, look at this, right? The low is 28 and the high is 37. What I say? $26 to 37. I was off by $1. You see, and that's why I tell you it's important to, what I'm trying to show you guys is intrinsic value. So what I did is I put 275, which is the halfway point of kind of the free cash flow, right? A little bit, right, not above 300, but right below it. And I made it grow at $0. You make it grow at $0, you get $26.23. So I said $26, right? And then I said if they grow 5%, then this goes to 37. So you see how I got $26 to $37. And if you look at here, you see 28 to 37. The problem is, and these are, analysts from all over. The problem is when a stock is owned by over 100% of institutional ownership, they're going to be truthful, right? Because a lot of these are packaged up and put in a portfolio basket for clients to buy, right? So they and there's a list of stocks that are in there. So they have to be truthful, because if you look at the analyst estimates here and look at how many analysts are in the stock, you could see 8, 9, 8. I mean, it's decreasing 6, right? Six EPS estimates, right? And then if you look at revenue, how many people revenue, it's around 4, but you could see 6, EPS, and there's 6 ratings here, 5 and 1. So there's about 6 people. There has to be some truth to it. Why? Because if you look at ownership percent, it's about 108% ownership of the company, right? So, these institutions have to be truthful, right? But the issue is when you look at a stock and when the ownership is 20%, like Clover, right? Or SoFi, or, Palantir once upon a time, you really have to learn how to set your own price targets. The issue is you have these idiots that act like they know what they're talking about, and they try to set price targets based off of technical analysis. But that is not the business. The price is not the business. The stock is not the business. It's the fundamentals. And all the numbers that we take are the fundamentals. And this is something different. Not a lot of people do this. And, again, it is what it is, right? But that's the alpha that, I make, right? So hope this makes sense. I guarantee you this is more for lifetime access members that have been tracking AMC for a long time. And I got some questions in lifetime access regarding dividends. And this is kind of a good way to look at a stock that does give dividends. You can see how it's still, the intrinsic value is still somewhat accurate, right? You gotta have to use binary ranges, right? Let's see here. Al, where's my phone? Oh yeah, no, I need my phone. I need to charge this damn thing, dude. Oh. Let's see, what time is it? Okay. All right. True dividend yield. Yep. There it is. Yeah. So hopefully, what a wonderful world, right? I love that song. But that's all I have for you guys. I hope this was helpful. Again, not gonna be a popular video, but there, it's usually the ones that are not popular that tend to be the ones that make the most money. It tends to be. I'm gonna make another video. There's a lot of things happen for Clover. Vivek commenting with all these other folks. Michelle, when does the golf course close? They close at 5. The dinner 4. I don't want dinner. We could sit there, but the golf course, the patio, we can get some beers and whatnot and enjoy, hang out there. We could go inside. They don't close until 6, so we could go in there. I can make a video just on the glass, and you could be in the patio. Cool, and I can grab a little beer here and enjoy. Yeah. All right, guys. Yeah. That's all I have. Yeah, I think that's it. All right, guys. I'll see you in the next one. I appreciate you all and hope you enjoyed the video. Have a nice day. I'll see you soon. I'm gonna go to the golf course.